The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We're going to get back under the hood of momentum stocks by first taking a look at another momentum stock identifier, indicator, if you will. One that our momentum strategist Dave Bartosiak uses pretty much of the time, and you're going to fill us in on this. And man, this has a real technical name. The moving average convergence divergence indicator. That
right.
alone would make me say, oh, sorry.
You got to make it sound fancy. That's the first part.
But it's technical.
And then it's very technical. And then, you know, those in the know just call it the MACD.
Oh, okay.
You know, so it sounds like an early 90s rap star, you know, MACD.
Or a hamburger.
Or a hamburger. Well, it depends on where you're, how much you had for breakfast today. So,
right, right.
But yeah, so the MACD is an indicator I like to use. It's a trend indicator. It can also show you the momentum of a stock. Mm-hmm. And really, it's not so much a single indicator as it is the love child of three different indicators.
Oh, okay. Wow.
So we talked about moving averages a couple of weeks ago, and that's basically where you're just taking the average of a stock price over a set period of time. And I mentioned back then that you can use different time frames in order to, you know, learn different information about a stock. So a shorter time frame, let's call it a 12-day moving average, is going to tell you what's been happening over the course of the last 12 days, shorter time frame. But if you stretch it out to, you know, 26 days, now you're going to learn, well, how is this looking in the intermediate term? So what the MACD does is it looks at the relationship between the 12-day moving average and the 26-day moving average. And that way it can tell you not just what the current trend is, but perhaps the current strength of the trend and whether or not there are changes in that trend. Now, the third part of this, there is a 9-period moving average on the MACD. Okay, right.
Okay,
so
sure there is.
You take the 26, right, and subtract it from the 12, and then there's an average on whatever that number is.
Yeah.
Okay, so
I think I could do that on my abacus.
Right, no problem. Just don't hurt your finger on the beats.
All right.
So you put it all together, and that gives you the MACD. So you see it plotted different ways. Sometimes it has a MACD histogram on your chart. Sometimes it's a line. So it can be a little bit complicated from charting program to charting program. But overall, you're going to get the same you know, relative values here, where if you have the MACD above 0, then you're in a bullish trend. If you have it below 0, then you're in a bearish trend. And then the strength of the trend really is determined by how far away from that middle line, that 0 line we are. Okay.
So you really use this indicator in particular all the time, or is there a certain market condition that you apply this to?
You know, I look at the actual moving averages themselves. So I'll plot these on the chart individually. The MACD is just a great, easy visual representation of, you know, multiple moving averages all at once. So it's really there, so it's a snap kind of thing. So people who trade on a shorter term basis really like it because they can just visually see it and boom. It takes a little bit of their, you know, kind of judgment out of the equation as far as, you know, how, you know, oh, well, maybe it's this way, maybe, no, it's not. MACD already told you what it is.
It is what it is, yeah.
Right, so it helps to take some of the error out of that.
So do you use all of these indicators that we talk about here in these segments all the time?
No, no. It's like, you know, when you're baking, right? When you're baking up something delicious,
right,
you're not going to put all those delicious ingredients in all the time, all at once, right? Otherwise, you'll have a cinnamon, coconut, marshmallow, you know, whatever that doesn't come out right.
Yeah.
So they're all used kind of in unison as far as you'll take 1 or 2 of them and then 1 or 2 or 3 of them, and you come up with these little trading systems.
I see.
You know, one at a time. So the MACD you could use as a trading system in and of itself. So you wouldn't need to use any other indicator. Now, granted, there are people that add, you know, layers to this. They use as filters, so that they don't get whipsawed with the MACD, because one of the problems with MACD is sometimes it'll give you 2 or 3 contradictory signals right away. You know, it'll be buy, no sell, no buy, no sell,
right,
and then that's when you run into some problems.
All right, so the stock we're going to talk about here today is Pericom Semiconductor. Now, you used this indicator to identify this stock?
Yeah, I did. So one of the things that I did is I took a look at all our Zacks rank #1 stocks. So that gives us that great, you know, earnings story and sort of fundamental background of what we're looking at. But then I went through one by one, and I wanted to find one the MACD is telling me is a good thing that I should look at. So this one definitely jumped off of the page, and we're going to take a look at the chart on this one here. But they are, they're a high-performance integrated circuit maker, and they've had 4 quarterly surprises in a row on the earnings side. So that's kind of the reason for some of this momentum. But now we're going to look at the chart, and you can see exactly why it is what it is, or how I understood it.
Okay.
So you can see here, okay, so we've got the MACD is that little green line, right?
That's the bottom graph.
Yeah, the bottom graph. So
Okay.
we got the green and the blue over there.
All right.
And whenever you see them cross over one another,
Yeah.
that's when you've got sort of if it crosses to the bottom, it's a bearish sign. If it crosses to the top, it's a bullish sign. But the 0 line in the middle also tells you anything above that is a bullish bias, anything below that is a bearish bias.
Okay.
So already you got 2 of those things that we talk about a lot, that trend and trigger. I talk about trend, trace, and trigger. So here you've got the trend and the trigger in one place with the MACD. So the reason why Pericom is a good play right now is recently you had that MACD come down very close to the signal line. So it got to the point where it was like almost about to get bearish. But then we had a bullish crossover, which is our trigger, and a signal that says, okay, jump back in the direction of that longer trend. So this is a lot, I like playing it this way rather than thinking that I'm the one who figured out this is the time that a bullish trend changes or the time a bearish trend changes. I want something that maybe the trend weakened a little bit, and now we're just going to jump back in the direction of the longer term trend. And this is what this is showing right now. So you can use the MACD, bullish crossover in positive territory, and it'll do the same thing for you.
So these indicators kind of remove the guesswork.
Right. They help to remove some and get some of your emotion out of the equation.
All right. Do you own this stock?
I do not.
All right. Check out other stock picks, stock picking strategies on our website, Zacks.com. If you're not there already, if you're watching this video out in syndication land, check the video page on Zacks.com because Dave does another segment called Trending Stocks that you may want to check out. With Dave Bartosiak, I'm Terry Ruffalo.